Welcome back to Income Trading 101. Today we're going to take a look at General Motors. This is one of the, I guess, pillars of the U.S. economy, or at least it has been at different times. There was a point when people would say, you know, what was good for GM and Ford was good for the U.S. economy. So this is a big one. Massive company. It has a very high correlation to the Dow Jones industrial index, so shouldn't surprise any of you that it's got this up move very similar to the Dow, although probably a little steeper when we crunch it in like that, but maybe not. We might look at that before the time period's up, and you can see just pulling the data all the way out. You know, they went from just doing their earnings to in 2014 paying a dividend. Look at that, 30 cents dividend back then. That was $1.20. They stopped that back in 2020. So they were paying a 38-cent dividend. That's a total, let's see, times 4. So it's about 152 if I did 152 on a $32 stock. So not too bad, about 3% for dividend payment that they would do annually. So that's just additional yield. They stopped that dividend payout in 2021, or early actually in 2020 when the pandemic started. But you can see how this stock really rallied in the comeback. So let's go ahead and do a couple things. We're just going to take it all the way back post-pandemic. I'm not going to really analyze at this point the pre-pandemic history of GM. So much has happened recently with regards to the car industry, the push towards automated cars, the push towards electric vehicles. So we're just going to look at the last half, and all of that, of course, is fundamental analysis. This channel focuses on technical analysis, which is just looking at the price charts. Most technical analysts believe everything's built into the price chart, and therefore all we have to do is look at what's happening to the price. We really don't have to look at the news. Now, I'm not hardcore either way. I know in a couple of comments, some people have asked me questions that certainly appear to be more about fundamental analysis, but ultimately, you know, when you get into earnings and stuff like that, that's fundamental. But we're going to have a little fun because I just like looking at the stock data and trying to see if there's anything that I can figure out that says to buy or sell. So that being said, let's go ahead and dive into this analysis. We're going to start off with the moving averages like we always do. Those in there. I'm going to tweak them to my normal specifications. So I like looking at a 2-week number on the 1-day charts. That's 10-day. We're going to look at the 1 month. That's going to be my sell signal, or at least a signal of prices going lower if it's on top. And then I like to have, in addition to that 2-week and 1 month, I like to have a 3-month, so a 60 trading day view. And to no surprise, it shouldn't shock any of you, the daily chart just shows that this thing is high and going higher. In fact, any pullback has just led to some a little bit of congestion in the moving averages, and then it's pushed on higher. We definitely are in that higher category. And I'm assuming it probably is a safe assumption that as we take it to lower time frames, we're still going to see a strong push higher because of the up bar that happened today. So today was a nice day in the market. Today, by the way, is March the 17th, 2021. GM ended up being up. General Motors was up $2.93. That's a 5% move on the day. So not too bad. Not too bad at all. So let's go ahead and take it to a lower time frame. We're going to go to the 1 hour. And of course, look at this. We had a little bit of congestion at the 1 hour, and then with today's move, it pulled higher. So when I say pulled higher, I mean that 10-day is higher than the 20, and both of those are higher than the 60. So all three averages are in line, which is indicative of an upward move in the stock. So let's take it one step lower. We're going to look at the 30-minute. 30-minute as well, because of this up move today, is showing a push higher. And just for just to be thorough, we're going to look at the 15-minute, and of course the 15-minute shows a nice upward move. So the challenge when you have these upward moves is that it's hard. It sometimes can be hard to predict when a pullback is going to happen. And if you look, each pullback over the last year, we went higher in April, we pulled back, and then we made new highs. We were higher in June, we had a pullback, and then we went on. It took a few months, but we retested that high, went beyond it, pulled back, went much higher, pulled back, much higher, pulled back, much higher in January 20th, pulled back, matched that previous high. So a double top is actually a chart signal that a lot of people look for, and it typically indicates that a retracement is about to happen, like normally a more significant one. We didn't get a retracement, we just got another pullback and a new high. Of course, today the Dow also, the Dow Jones Industrial Average, also finished on a new high. So there's a lot that's going on right now to just give this stock the upward momentum. And I'm not, I know two things. Stocks don't go up forever. And number two, I don't sell strength when it's still pushing higher. I never want to get in front of a Mack truck. This thing has momentum. We're going to look at the momentum indicator here in just a second, but there's no reason to get, at least outright with stock or futures or anything like that, to get in front of this Mack truck, because you'll probably get steamrolled. So let's go ahead and look at the MACD, which is more of a momentum indicator. And I'm sure with this push higher, that the MACD really, especially on the daily, isn't going to be of much value. You can see this thing hasn't crossed below the zero line since summer 2020. It's just stayed above in the overbought area, and it goes lower and then pulls higher. This crossover is not a buy signal with the MACD because, you could use it as one. The problem is if you don't also join it with a crossover below the zero line in the oversold category, this over here, this crossover that happened last week in March, this will lead to a lot of false positives and a lot of trade losses. So if you're you gotta have to know the faults of the indicators that you're using. But let's take a look at the lower ones, because we might get some nice. So at least in the 1 hour, right? In the 1 hour, we had a nice crossover below the zero line back on January the 28th. So that would have been a nice purchase. We had another crossover on February the 12th, but I would not have trusted that until they crossed the zero line, and you can see why. Look how long this thing sort of went up and down. It just sort of oscillated in that area as stock price was actually moving lower. So if you had decided to buy at that point, there's a good chance that you would have lost money and maybe even exited the position before it turned positive. And there's nothing, if you trade, you understand how frustrating that is to buy into something, to be correct on the analysis, and then but to lose money because of the way that you executed the trade. And that's why I like to wait for clear signals like a push above the zero line. You had one here and then it crossed. So actually, if you had bought over here on March the 1st and then exited, on March the 3rd, when you have that crossover in the overbought category, you actually would have made a nice little bit of money, even though you would have caught a little bit of this pullback. But clearly, holding on for this ride was the answer. So the last time we saw a cross on the 1 hour below the zero line was on March the 5th, and it hasn't come back since. Let's look at the 30-minute and see if there's anything there on the 30-minute that would have been tradable. So this definitely would have been tradable. March the 5th. So that's awesome. The way it really highlights that. And this is why I like to look for, or I like to use the smaller time frames to enter positions. You can always manage with the bigger time frames just so you have fewer oscillations that might trick you. But being able to enter with the shorter time frame view is, I think, a lot more accurate for these indicators. So this one down here, this crossover below the 0 line, and it hasn't come back. I guess it pulled back a little bit, but really didn't. It just sort of stayed right there within even the histograms there. So I like this move on the 30-minute. And then on the 15-minute, you would have seen a lot more oscillation. Here's that move back on the 5th. But, you know, it's always, I think the 15 might actually be a little bit much, but this is actually valid. This crossover today of the MACD and the signal line, and then how they crossed over below and now have moved into the positive territory. They've moved into the overbought category. I think this would still be a viable buy signal. Definitely a viable buy signal on using this MACD. All right, we are not going to get into the Fibonacci retracement, mostly because there hasn't been a retracement that wasn't also met with, right, a new high. So that makes it less valuable. And even if I drew out a trend line like this up move here that occurred back in January would extend beyond the trend line. In fact, this was so steeply higher that it actually changed the trend. It kind of went flat for a moment, and now this trend line. So maybe I will. Maybe I'll go ahead and draw a channel, because I'm talking about it, and really I should just show it, because picture's worth 1,000 words. So we're gonna do that, and then we're gonna change the angle there. Well, we would have. Had I moved the cursor, here we go, we're going to change the angle. And my goal with these is always to get as much data. But this will show you what the challenge is. The challenge here, I've drawn let's see, we've got $61 down to $47. I've drawn a $13 wide channel, and that really just is not the best for this stock. So even if I were to tighten it down here, pull in sort of this move since July, and then angle this one higher, I can try and sneak that's a little better. In this scenario, let's see, we've got 61 and 51, so at least I shrunk it from $13 wide to $10 wide. That's a little more viable. It might even be better to pull that lower. Something along those lines. But either way, I like to use these channels just to get a sense of just so that I know, like, hey, if the trend continues, where might this stock go, right? Like maybe it ends up going to 61 or higher. But I'm going to do something else, because I don't feel like this channel is really giving us the best data. So I really want to analyze the one that we're in right now. So I'm going to tighten this up a little bit. I don't want to fit it too much. I've mentioned in other videos the possibility of overfitting, right? It's where you make the perfect trend line, but we know that life and trading doesn't end up being perfect, so you end up creating a model that does not actually benefit your outcomes. So, but I am going to tighten that up. So just looking at it this way, it looks like, let's see, it looks like we could see, you know, $63 soon. We could see So that'd be a nice little up move. Another $3. That's roughly another 5% in this stock. But it could go completely higher, or it could go ahead and go lower. Again, I mentioned that this has a very high correlation with the Dow Jones Industrial Average. So let's take a look at what that actually means. So, you guys have probably heard of something called beta, and if not, I can explain it another time. But beta is just a way of saying how closely are two assets to each other, how similar are they. And I'm just going to use the ETF, the Diamonds ETF, to view this. Let's see. Well, maybe they're not as closely related as I would have thought, because you see the diamonds, really, it's the Dow. The diamonds really have flattened off. Well, let me rephrase that. It looks that way because of how I've shaped that axis. Okay, that's less so. But I still want to, it's not letting me affect the axis here. I want to see something too and see if I can just add in like the Dow futures, even though the, let's see, futures. Dow. Yeah, the E-mini Dow, that'll be fine. I don't know if any of you guys trade futures, but I do enjoy, I've always enjoyed trading the E-minis, and so the E-mini Dow is a fun one as well for those of you who like the E-mini S&P 500, which is a pretty popular one. The E-mini Dow is just as much fun. So yeah, so check that out. GM actually has significantly outperformed the overall economy. So it had that dip that the economy saw, and it sort of stayed in there. But really, as of, we'll call it November, and certainly into January, GM just went on a tear and has outperformed the Dow. So that's always a positive, because if you trade stock, the goal is always to outperform the indexes, mostly because through things like the diamonds that I just looked at, the ETF, you can replicate the returns of the index. But if you're going to actually trade the money yourself in individual companies, you'd like to out earn it. You like to make more. So anyway, I can keep talking and make this video a lot longer. That is it for the day, for this video. Thank you guys so much for watching. Hey, if you haven't subscribed, definitely hit the subscribe button so that you're alerted when I make more videos. I'm making videos every day. Also, have appreciated the comments and the likes. So if you have any questions, feel free to drop them in the comments. I do not have a crystal ball, so I can't tell you exactly where the stock is going. I also want to make it clear that this is entertainment, and I avoid giving actual investment advice. Like, hey, should I sell this right now? That's such a loaded question, because your portfolio might be set up differently than mine. So I can't answer for your portfolio, and it's a very, very real thing. So anyway, feel free to make comments and ask general questions, and I'll do as best as I can to answer. All right. Hey, you guys have a good day. Happy trading.